Yo guys, welcome back with me, Kenwilboy. In this video, I'm going to talk about best leverage for small account in Forex. Okay, I've been asked this question a lot. People ask me this question all the time. So for those who don't know me, I'm Kenwilboy. I'm the founder of Fortunomarkets, the best broker in the world. And I'm also a professional trader with more than 10 years of experience. Okay, let's begin. So before I tell you which leverage is the best, you need to know how leverage work first in the first place. So how do leverage work? Leverage work by increasing your buying power or selling power so you can trade bigger position with smaller amount of your own money. That's how leverage works. It's basically some kind of a loan given by your broker for you as a trader so you can trade bigger with smaller amount of deposit. So you don't need to deposit big amount, but you can trade big amount. So this is a very good representation of leverage. As you can see here, this is 1 to 50 leverage. In Forex, this is pretty small. As you can see here, with just $200 of your own money, you can trade up to $10,000 in assets, whatever asset, either gold, Forex, or crypto. With 1 to 50, you can trade 50 times bigger than your account balance. So what's the benefit of that? Well, you can gain more profit, of course, because you trade bigger amount, you gain more profit, but also you inherently get higher risk. So it's like the higher the leverage, the higher the returns, but also the higher the risk. That's basically it. And which leverage is the best? Some people said, oh, it's 1 to 100. Some people said, oh, it's 1 to 500, 1 to 1,000, 2,000, or maybe unlimited. Okay, I'm going to tell you this. There are two types of traders out there, the high risk trader and the low risk trader. Depending on who you are, usually the low risk trader, they tend to use lower leverage. They tend to use stop loss, they use smaller lot sizes, and usually their account balance is higher, so they deposit bigger amount. That's the low risk trader. They want to be conservative, they want to make consistent profits, and that's the opposite of high risk trader. For high risk trader, usually they think that, okay, this is Forex trading is a high risk instrument anyway, I'm going to go all in. So normally they go all in. They use the maximum leverage of what's possible, very big leverage. They don't use stop loss. So their stop out is actually their stop loss. So if they blow their account, it's okay because their whole account is their stop loss. Zero balance is their stop loss. You get what I'm saying? And then they will tend to use big lot sizes, as big as they could, maximum leverage again. And then they normally would only deposit small amount of money. So, they only deposit the money they are comfortable to lose. So I think that's a good way to approach trading. Anyway, you should only put in the money you can afford to lose, or you're comfortable if you lose it all. I think that's a good approach for trading. But again, for these different kind of traders, they use different leverage. Maybe for the low risk trader, I would say if you want to trade with lower risk, more conservative, you prefer consistent profit over big profits but high risk, I would suggest you go with like 1 to 100 leverage or 1 to 500 leverage maximum if you want to approach trading in a low risk manner. But still, even though you try to minimize the risk, trading with leverage is a high risk activity anyway. So yeah, keep that in mind. How do you calculate leverage? What's the difference? Okay, I'm gonna show you here using a calculator. So one lot of gold is actually very big. You might think, oh, it's just one lot. It's like $1. No, it's not $1. One lot of gold is actually around $300,000 worth of gold. So it's like 5 kilograms of gold or something. Like if you take one lot of gold and represent it as a physical gold, it's going to be heavy. It's a big chunk of gold. So I'm going to use this calculator. In order for you, how does leverage work? Here, one lot is $300,000, right? If you are using 1 to 100 leverage, it means that you can open 300,000 divided by 100. You can open one lot of gold with just $3,000. Gold position, either buy or sell, anything. How about if 1,000? If you are using 1,000 leverage, it means you can open $300,000, one lot of gold, with just, let's divide by 1,000, with just $300. How about if you're using even bigger, like here in the broker I'm using, fortunomarkets, unlimited leverage, but unlimited is actually, I'm going to info, unlimited is actually 1 to 10,000. It's a very, very big amount. It's a big leverage. It's a giant leverage. Okay, I'm going to divide 300,000 with 10,000. This is basically unlimited leverage. You can you can open one lot of gold with just $30. It's insane. One lot of gold is $300,000 worth of gold. It's like you can buy a Ferrari, the latest and greatest Ferrari, with just $30. It's crazy, right? Yep, that's how leverage works. But you know, if the market moves against you, you can blow your account in seconds, in 1 or 2 seconds. Boom. That's how leverage works. But you know, some trader likes that. Depends. Are you the low risk trader or the high risk, high reward type of trader? Okay, I have already explained the low risk trader, maybe 1 to 100 or maximum 1 to 500 leverage. How about if you're the high risk trader? You want to go all in? Okay, you have this kind of mindset. I've only deposited money I can afford to lose anyway. I'm comfortable losing it. It's okay. This is just play money. Okay, maybe you deposit $50 or maybe even less, $20, $20 to $50. You're comfortable losing it. I'm going to go all in. I would suggest you to go with unlimited leverage. Unlimited is basically 10,000 here. You can check here, 10,000. But there is only a few broker who offer unlimited leverage, and Fortuna Market is one of them. I think one of the best broker with unlimited leverage. Then you can use unlimited leverage if you're the high risk type of trade. But keep in mind, you can blow your account in seconds. But you know, some traders, the high risk trader, they will think you can only lose 100% anyway, right? If the potential gain is 1,000%, why not? It's 1 to 10 risk to reward ratio. You could only lose 100%, but you can gain 1,000%. So if you have that kind of mentality, so then go on, try unlimited leverage. And if you want to try unlimited leverage, the best broker for you to trade Forex or even gold with unlimited leverage is using Fortuna Markets, because they got one of the lowest trading fees. Their spread is so low. It's very thin spread, lower than any other brokers, and their leverage is highest in the world, unlimited, or basically unlimited is 10,000, whatever. But it's very high anyway. It's really, really high. Most of the other brokers, they only offer something like 1,000 or maybe 2,000 leverage maximum. But Fortuna Markets unlimited, and then they got good regulation and strong global presence, so your money are safe with Fortuna Markets. So you don't need to worry about withdrawal. Their withdrawal is very quick, instant withdrawal. No matter how much you withdraw, they always process it quickly. So yeah, this is a good option for you if you want to start trading. So now you know which leverage to use. Again, I will make a conclusion of my video. Depending on what you trade or your characteristic, your trading style, if you're going for low risk, maybe 500 leverage or below is good. If you're going for very high leverage, then try unlimited leverage. As high as it possibly can. That's unlimited leverage. Yeah, if you like this video, don't forget to like, subscribe, and hit the bell icon down below. And thank you for watching. Peace out.